Let's start with what has been happening in Japan. That has been the biggest forex story today. Japan, after days of warning, today intervened into the currency markets and sold the Japanese yen. This is Tokyo's second such move in 3 months. The Japanese yen slumped against the US dollar, and we saw the dollar gain up by nearly 4% versus the Japanese yen in the day today. Markets also are seeing this as a reaction ahead of the G20 summit later this week. You also would have the Europe ECB meeting coming up on Thursday and the Bernanke statement also on Thursday. So ahead of that is how the move has been seen. The dollar index in the meanwhile gained by nearly 1% today. You saw euro also pull back from its lows but continues to trade under pressure. The Indian rupee in the meanwhile did open slightly on the lower side, but we have seen it recover from those kind of losses, holding around 48.75 at this point in time. Let's go across now to Ashok Gautam. He's Senior VP and Head Global Markets at Treasury Axis Bank, and he joins us live in our studios. Mr. Gautam, hi, welcome to the show. How do you look at what Japan has done today?
In fact, if we recall last time when we met and we said that a 76.10 was the level last time Bank of Japan had intervened, and this time they allowed it to go further down, and 75.50s was the level where very determined Bank of Japan action, I believe what the news says on the instructions of the finance minister. And we suddenly saw a very big move where it saw yen touching 79.21. And this was something which was always expected, because the level around 76 was something which Bank of Japan or the Japanese financial officials have already said that they are not comfortable seeing yen becoming so strong. It's not good for their economy, and then they will not hesitate in intervening in the market, and that's what we saw today. And it had its own impact on, you see, what immediately happened on euro and Australian dollar. Because what I understand, a lot of profit taking was there in euro yen and Australian dollar yen, which saw the euro coming off and Australian dollar coming off.
Well, absolutely. The knee-jerk reaction came across board on all of those currencies. But Mr. Gautam, this is like a heavy data week. You have an ECB meet coming up, you have a G20 coming up, you have a Bernanke statement as well. So ahead of all of this and after this, how do you see currencies behaving?
Let's go step by step. Let's first talk about euro. What we have been seeing that the Eurozone 1 trillion euro fund which they are now talking about, if that is a number which is correct, people are not very sure whether they will be able to come out so successfully with that number.
Sure.
Let's look at that. It is a political career of both the French as well as German Chancellor. It's on the line, and they are quite determined, and that's why they forced last week banks to take a 50% cut. And that's what saw euro going up to 1.42 levels.
Sure.
But I am not very comfortable that because I was looking at the chart, and a very prominent signal which I saw, which points to me that the euro might head towards 1.3833.
Okay.
But let's see, the whole currency movement which we have been seeing is very news driven. So this week, which is going to be a very significant week of what all news come out, will have its impact on currency and the way they are going to behave. And again, I think one more thing I'll mention, what's going to happen tomorrow about Reserve Bank of Australia, whether they are going to hold the rate or not, which is the immediate point which is going to happen.
Sure.
Our view is that they may stick to 4.75% rate, but if they talk about a cut, you may see a move in the Australian dollar. But if the rate remains there, then Australian dollar may again have a go at 1.07 level. So let's see how it progresses.
What impact do you see of all of this coming into Indian rupee? Today has been a good day, but do you see it sustaining and keeping up like that?
I think our very critical move, which actually triggered from the currency going beyond 50 and around 50.35, we saw very determined price action, which brought the currency down. And now it is hovering around our crucial levels, which we have been talking about earlier, that is 49.20 and the 48.20. So what we see a bit of a range play in Indian rupee. But let's also look at about when I initially spoke about rupee breaking beyond 49.20 and its relation correction with Korean won and other emerging market currencies, you see all of those currencies actually came off very fast.
Yes.
But rupee did not come off. Rupee was consolidating around those levels. And what we firmly believe that this is a phase where rupee is going to consolidate.
Okay.
And maybe little later rupee will gain its strength. But at this point of time, 48.20 is a very good support. If it breaches, then 47.20 is next level. We have to watch out. But I always give the other level also, which is 49.20. Keep your eyes open for that.